Hello. This presentation is to help you to answer a typical exam question in a subject such as corporate finance. We start with the question. Now, typically in corporate finance, the questions you get might be quite long. So the first tip is don't see the question as a story that you have to start at the beginning and get to the end and understand every word. Instead, think of it as more as a buffet where you scan the whole thing and work out where things are, and then you go in and get what you want and what you need at particular times. So this particular question, we start reading it, and of course we don't know what topic this is at the start. We just start reading the question, and that's one of the things we have to work out. So quick look at the first paragraph. Yes, company, sales, goods of sales, cost of capital. Okay, not quite sure what this question is about. Let's read on. Paragraph 2. The firm is considering a proposal to offer customers a discount and is affecting receivables. This is about working capital management and in particular the management of receivables. Then I read on. There's an alternative. There's two alternatives I have to consider. Okay, I won't bother reading any more details. I'll come back to that later. But there are two proposals there that I might need to do something with. I'll move on a bit further on in the question, and yes, they presented me with data. Again, don't read it for now. It's a balance sheet. Now here I slow down a bit because here it's telling me what I need to do. There are 4 parts to the question. I noticed that the main marks are parts C and D later on, and they are evaluating those 2 proposals I've already identified. The first 2, preliminary work, I've got to do some calculations around that. Okay, I'm now ready to begin. So, part A, I'm going to tackle first. Now, in this presentation, when things pop up on the screen in green, that means that's something in your head. That's your thought process that you go through as you're sitting there in the examination. The things that are in black type are the things that you actually write down on your paper. So, what's the first thing in your head? Well, the first thing that you need to do is what is the relevant fact or formula I'm going to use to answer this question? You go into the examination with like a toolbox of things that you know, of facts, of formulae, things like that. And even if you're lucky, in the examination, the examiner might have given you a sheet of formula that you can use also as part of your toolbox. So you don't have to have it all in your head. But the point is you have to choose the right tool for the right job. So the first job is to think, what is the right fact or formula, the right tool to deal with a calculation of net working capital? Well, we've got to know what net working capital is. And there it is. Net working capital is current assets minus current liabilities. Phew, I think I can do this. So what's the second step? The second step is to find the numbers in the question and insert them. So where am I going to find the numbers about current assets? Balance sheet. So we go back to the question, have a look at the balance sheet, and there's an extract from it there. Where do I find the current assets? It's there, total current assets, and that's what I pop onto my examination answer. Net working capital equals 72550 minus what? Minus the current liabilities. So again, where do I find those? Same place, the balance sheet. So there's an extract from the balance sheet again. Current liabilities down the bottom there, 3720. Pop them into my answer and do the calculation, and there we are. Have I finished? Not quite. Always remember, try to help the examiner out. Write the answer clearly in words with units so we're absolutely clear what is your answer, what you're saying to us. And try to use the words of the question. The question says, calculate the firm's net working capital at the end of 2015. So your final answer should be, the net working capital at the end of 2015 is, and then make sure you get your units right. In this case, it is thousands of dollars. And that's what your answer looks like on the page. Let's move on to part B. Estimate the firm's cash conversion cycle in 2015. You can guess what the first step is. We need some relevant fact or formula about cash conversion cycle. What's that? Yes. The cash conversion cycle is inventory days plus receivable days minus the payable days. Okay. So what's the next step? I realize I'm going to need 3 more formulae. One for inventory, one for receivables, one for payables. But I also realize that I could do this quite efficiently and present it nicely if I put it into a table. Not essential, but I encourage you always to think about, is a table structure a good way to present this work? So here we go. Here's my table. I've got three elements: inventory, receivables, payables. I've got a column for the formula. I've got a calculation column where I'm going to put the numbers in, and then a column for the answers for the actual numbers, and I'm going to then add and subtract them at the bottom. So I've set up my table, and let's have a look at this. First of all, let's have a look at the formulae. The inventory is compared with cost of goods sold, COGS, cost of goods sold. Why? Because inventory is valued at cost. So that if we compare it with sales, that's comparing two different things. The prices will be of the inventory and the prices of the sales are different. So we compare it with cost of goods sold. Receivables, though, these are things which are valued at sales prices, so we compare that with sales. Now, payables, ideally, we should compare this with purchases, or in fact credit purchases, but often that's not available to us if you're an analyst outside the company, and so rather than that we have to use something else which is as near as we can get to purchases, which is cost of goods sold. So, okay, so those are the formulas. Now again, as in the previous section, we get the data needed from the question. So inventory, where's inventory? Balance sheet again. So we go to our balance sheet, have a look around, there's our inventory, and we're ready to pop that in. What's the next thing we need? Cost of goods sold. Now where's that? Now normally that's found, of course, in the income statement, but we weren't given an income statement, so we have to go back to the words of the question, and there we find this useful thing: Shanghai Outboard Motors had a cost of goods sold of 20 million. There's our number, so we can pop both of those numbers into our calculation, and away we go. Now, similarly, we do the same for the receivables and payables. I'm not going to go through that in detail, but you look back to the balance sheet or the question to find the numbers you need, and there we get the receivables and the sales, and there we get the payables, and again the cost of goods sold. Next step, do the calculations and present the answer. So we got 23, 45, 27. Now don't be worried about the pluses and minuses I've put in there. That's just to remind me of the formula: inventory days plus receivable days, but minus payable days, just to avoid me making the mistake of trying to add these three numbers up. So I don't add them, I add two of them and subtract one of them to get an answer. And then, is that the end? No, present the answer nicely. The firm's cash conversion cycle in 2015 was 41 days. Should that be 41.4? Well, it's up to you really, but I suggest that to have another decimal place there would be a delusion of accuracy. Remember, the numbers in the balance sheet are merely a snapshot at one moment in time, and so the calculation we're doing is only an estimate, not an accurate figure. So 41 days I think is quite reasonable. Part C. Evaluate the proposal to offer the 1.5% discount. Now, these sorts of questions where you have to evaluate something, the trick is to categorize your the elements of the proposal into the costs and benefits, and then evaluate them all together. So let's take us through the process. The first step is to, just in your mind, and I would do this sort of separately, is list the costs and benefits. So we have a column for benefits and a column for costs. Then we go back to the question and examine the information we've been given about this proposal. And this one, part C, is quite a simple one. All the information is contained within just 3 lines in the question. The firm is considering a proposal to offer customers a discount, estimated that trade receivables will be reduced. So I think you can see we've got 2 elements here. The benefit is a reduction in the cost of receivables. Notice it's not the reduction in receivables that's the benefit, it's the reduction in the cost of receivables. We'll come back to that. And then what's the cost that we have to pay to get that reduction? We have to give a discount of 1.5%. Okay, so those are our benefits and costs, and that's all there is in this example. So now, step 2, find the numbers in the question again and do the calculations. So let's have a look. The reduction in receivables is where we'll start. Okay, well, what were the receivables before we made any change? Well, again, they're found in the balance sheet. And where are they? There they are. The 3,950 is the trade receivables, so that's our starting point. Now, what does our proposal aim to do? Trade receivables could then be reduced to $3 million. Aha! So there we've got the numbers. Starting point, end point. So we can pop those in, subtract those two, and we get a reduction in receivables of 950k. Now that we have not finished yet. Sometimes people think that's done and move on. No, that's the one-off reduction in receivables. But the benefit to the firm is that the cost of having this working capital, of paying our investors for the privilege of having their money, that's the saving we make, because we don't have to pay them the interest or dividends or whatever it is that we're paying for the privilege of having someone else's money. So the cost saving is the cost of capital times the size of this reduction, and that saving kicks in every year. So what is the cost of capital? The cost of capital for the firm is 15%. That was in the question. So we can pop that in and get an answer. The benefit of this proposal is $142,000. Now we can move on to the costs. So we're giving a discount of 1.5%. How much revenue will we lose? Yeah, that's easy. It's just 1.5% of our sales figure, which is 32 million or $32,000. So that's 480k. Have we finished? No, not quite, because we need to again pull everything together into an answer. The proposal has a net cost of 337k. Okay, that's part 2 done. And that is what your answer would look like, or could look like, on the page. Again, if you put benefits above costs, or costs above benefits, or costs on the left and benefits on the right, that doesn't matter. But the point is that you clearly separate out the benefits and costs so that we can see it. Good. Finally, part D. Evaluating the proposal to use the factoring service. Now, there are more elements to this, but the process is very similar to part C. We start off by listing the benefits and costs. There's our headings, benefits and costs. And there we are. There's our bullet points in the question. So we go back to the question to identify them. And immediately, the way this particular question is laid out is made easy for us, because there are 4 bullet points. So that might mean that there's 4 costs and benefits altogether. Let's go through them and have a look. So the factor would pay Shanghai Outboard Motors the full value of invoices immediately. We're going to have a reduction in cost of receivables. So our receivables is going to go down to 0. We've got bad debts would fall to 0.5% of sales, so we've got a reduction in bad debts. Administration costs would be saved, so we've got a saved admin cost, and the factor's fee is 1% of sales. That's on the other side. That's our fee that we've got to pay the factor, 1% of sales. So there we are. We've got our listing of benefits and costs. Now our job is to evaluate each of these. So what I'm going to do now is to do these on the next slides, because there isn't room for this question to do all 4 of these evaluations on one slide. Okay, so let's move on and calculate each benefit cost step by step. So here we go. Benefit 1 was the reduction in the cost of receivables. Well, we've already done this on part C, so it should be straightforward now. The key fact is that the factor would pay Shanghai the full value of the invoices immediately. So the reduction in receivables is the full value of the current receivables of 3,950k. So that was easy. Don't forget, we have to calculate the cost saving. So the cost saving is the cost of capital times the reduction. And again, we know the cost of capital was 15%. We've already used that fact. So we just multiply those together, and we get a saving of 592k. Let's move on to benefit number 2, which was reduction in bad debts, and also we'll do the admin saving as well on this slide. So bad debts are currently running at 1% of sales, and bad debts would fall to 0.5% of sales. Okay, so the reduction in bad debts is the difference between those two numbers, 1% minus 0.5%, times our sales figure of 32 million, and that gives us a saving of 160,000. Let's move on to the admin saving, and that's again very straightforward. The question says that admin costs of 35,000 would be saved, so the saved admin cost is 35k. Now let's move on to the factor fee and the cost on the right hand side of our listing. Again, this is very straightforward. The factor fee is 1% of sales, so that's 1% of 32 million, and that equals 320k. Put it all together, we have to add up the benefits and the costs, work out the net benefit or net cost. So add and subtract to find the net benefit, and we need to write our answer clearly. So the sum of the benefits was those three numbers, 592, 165, 35, to give us 787. And the sum of the cost, there was only one cost, so we don't have to do anything difficult there, 320k. The proposal has a net benefit of 467k. There you are. That is what would appear on your answer sheet, and you've done the question, and you can move on to the next one.